Our guest tonight says Ben Bernanke finally got his message out to investors and they're feeling calmer. She's Rebecca Patterson, Chief Investment Officer at Bessemer Trust. Rebecca, great to have you. You have now listened to Ben Bernanke give multiple forms of testimonies and speeches and everything. Now that you have this clear message, are you doing anything different with your investment strategy?
Actually not. We have been overweight equities. We've had a maximum underweight allocation to traditional government bonds, treasuries, agencies. For a couple of months now, we've always had the view that the Federal Reserve doesn't want to do anything but be gradual. Bernanke does not want his legacy to be that he moved too fast and drove the economy into a new recession. So what Bernanke has said today and in the last week or so really is kind of underscoring what we think will be a very gradual but a very real turn in the bond market.
And so let's be clear about that. A lot of people rush to the bond market for safety, Rebecca, but yet bonds have lost principal as yields have gone up in anticipation of the tapering by the Fed. Do you think that will continue?
Well, I think yields will keep going up this year and in the coming years. So I do think all those investors who over the last literally 30 years have enjoyed bonds need to change their expectations on what bonds can and cannot do. I think they can still help protect a portfolio if stocks sell off sharply, but in other times they are going to be eroding value. So you don't want to have too much of it. You want to be looking for other ways to get safety, but it is going to be a slow, gradual process.
You know, Ben Bernanke talked also a lot about fiscal policy, saying that it's too short-term oriented. So to what extent what's going on in Washington over the next couple of months will be impacting what happens in the stock market over those next couple of months?
Oh, absolutely. You know, when I think what keeps me up at night most, it's not really an issue today. It's a time frame, and that time frame is September. We have the continuing resolution that funds the U.S. government expiring in September. We have a very important Federal Reserve meeting. They might begin tapering that month. We might learn who Mr. Bernanke's successor is that month, if he is going to be succeeded in January by someone. A lot of event risk in 1 month, and fiscal policy will be front and center. Does Washington use the continuing resolution and the debt ceiling further this fall to create controversy? Are we going to have a game of chicken like we did in summer 2011? Or are we going to get more bipartisanship like we saw in March this year? Depending on how that plays out, I think that's going to either help equity markets go higher or possibly give us a pretty ugly pullback. So September is going to be a critical month to watch.
Well, in the meantime, you do have to put clients' money to work. Which way are you going? Do you go with the cyclicals, anticipating that growth, or do you stay defensive ahead of time, just in case?
Well, for the moment, we are optimistic. We're going to give Bernanke the benefit of the doubt. There's a lot of risk around the exit from quantitative easing, but as we keep seeing decent signs on housing, on autos, the consumers holding up despite higher taxes, Europe stabilizing somewhat. You know, we are overweight equities. We're overweight U.S. equities. So we're riding along, but we're staying nimble enough that if we get closer to September and things aren't looking so pretty, we can pull back at least on a temporary basis.
A lot of good information. Rebecca, thank you so much for coming on the program.
Thank you.
Rebecca Patterson, Chief Investment Officer at Bessemer Trust.